The stock market has been on a roller coaster this fall, down in September, up in October. So what's in store for the final 2 months of 2021? We explore that in this week's Fastest 4 Minutes in Finance. Hello again, I'm Scott Inman. Well, the month of October isn't over yet, but as long as there's not a huge Halloween scare in the next couple of days, the S&P 500 will finish up over 6% for the month. Now that does follow a negative return in September of more than 4%, but the year-to-date return on the S&P is over 23%, and earlier this week we even set another all-time high. So what can we expect for the rest of the year? Well, let's let history be our guide. Take a look at this chart from LPL Research. Going back to 1950, the S&P 500 typically forms a major low near the end of October and then rallies to end the year. It's commonly referred to as the Santa Claus rally. But as we just mentioned, October has been pretty strong this year. Well, check out this chart. This chart tracks the S&P 500 performance in post-election years since 1950. Historically, in those years, which 2021 is one, stocks take a dip in late September and then take off to end the year. 2021 is following that trend so far. Now, we don't want to get too bogged down on charts, but here's our final one today. Let's look at just the month of November. This chart shows the S&P 500 performance each month from 4 time perspectives since 1950, over the past 20 years, past 10 years, and in post-election years. As you can clearly see, November has been one of the best months of the year for stocks. It has the best returns since 1950 and over the past decade, and is the second best month over the past 20 years and in post-election years. Of course, history isn't the only thing that matters. Fundamentals matter most, and we are in the midst of earnings season again. So far, most companies are exceeding expectations. As of the end of last week, less than 20% of companies had posted third quarter earnings, but 80% of S&P 500 companies had reported and beat their estimate. Leading economic indicators are positive too, though cooled from earlier in the year, and sentiment is still bullish, although concerns over supply chain problems, inflation, and what the Fed will do with interest rates are all potential headwinds. However, overall, we see a good environment for stocks to continue their ride up for the end of the year and beyond. As always, though, it's good to remember that stocks should be considered long-term investments. What happens over the next couple of months should not greatly impact the decisions you make regarding your personal financial plan. Thanks for watching.